Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, and portfolio manager and financial advisor in Edmonton. Welcome back to our show, Hilliard.
Always a pleasure to be on.
Hilliard, with so many people working from home, what kind of hit is commercial real estate going to take when so many companies find out they can run just as efficiently without having to pay for lights and heats and property taxes?
Well, it's a huge thing. You know, I was coincidentally yesterday I had to go into the office in the high-rise office tower, and in our company you have to schedule a time to go so you'll be there when nobody else is there. But other than that, for the last 7 weeks I've been working from home, and I haven't found it to be too big a challenge to work from home. And I think that's the big eye-opener for a lot of us is. Before I was doing it like sort of a third of the time, but I could see making the permanent choice to stay home and then just go into the office maybe occasionally for meetings, group meetings and stuff. And so that could have a big impact. But in the office tower, I talked to some of the people there that I ran into, and they said they didn't know if they should curse the retail space in the office tower is dependent on the office workers being there. So they've been given a 4-month rent holiday, but I don't know what happens after that. And that we're probably already 1 month into that, right? So the month of April.
I hadn't thought about those little coffee shops and stuff, on the bottom floor of your office tower.
No, the one fellow I was talking to was from the hair salon, and he said he didn't know if they could reopen when he said they had lots of calls. The government of Alberta said that it's time to reopen, and so they had lots of calls, but he says, I don't know how it's going to work. And he says, I don't know, I don't even know what's going to happen, and there's a couple of menswear, women's wear stores, and now a lot of this was happening already before the virus came, so they've already had some closures, some pretty big number of closures in the office tower. So it's a trend, but this is, what I think is this is kind of like 10 years of change happening in 10 weeks. That's what it feels like to me.
And of course, a coffee shop, I don't know, ordering online, do they take out and drive it 10 miles to your house?
Well, I've always wondered about, some of these coffee places are really the attraction. It doesn't appear to be the coffee, it's the sugar and the cream, right? So double, triple, may even go higher than that. I don't know. And it's so much cheaper just to do it at home with your own little coffee maker. So one of the things you wonder about is so many people were eating out so many meals, and of course it's more expensive. And during this, what looks to be like at least an 8-week stay-at-home situation, will people rediscover the joy of home cooking? For partly financial and partly just maybe they like it better than they realized, or they're better at it than they thought they were.
Well, they're baking like crazy because you can't find vanilla or cocoa powder. Hilliard, so with the changing face of commercial real estate, what kind of situation are cities like Calgary and Edmonton in, which were already facing tough times because of the slowdown in the oil patch?
Well, it's just crazy. Like the Calgary one is the biggest example, of course. And there's a couple of brand new buildings that are just being completed, the Brookfield building and the Telus building. But there was something like a 25% vacancy rate in Calgary, which is something like 3 full 30-story towers of office space. There is one, just in the last 3 weeks or so, I read that there is one now that has turned out the lights on a full tower. But most of the other vacancies would be spread throughout all the different towers. But, it looks like it's never coming back. Like there wouldn't be any reason for it to come back. And one of the things that's becoming clear is that there's way too much oil in the U.S. and in the world, but especially in the U.S. with relation to the amount of oil that's been produced through fracking and shale. But there's a positive spin on that story, in that the fracking people they have to spend a lot of money to get the oil, so they have to spend a lot of money on doing the actual procedures, and they have to keep doing it. They have to keep refracking and keep spending enormous amounts of money. A couple of big ones have already gone bankrupt, and a whole bunch of smaller ones probably are shutting down. So because of that, the oil sands, which is a different situation, could actually become more viable if the fracking people shut down. Now, what happens if the lenders take over the fracking operation because the debt is defaulted? Will they have the money to spend the money to get more oil out of the ground, or will they just shut it down? We don't know. But if the supply of oil, which is there's like 7 million barrels per day of new oil coming out of mostly out of Texas, some out of North Dakota. If some of that disappears, then the 2 or 3 million barrels a day that's coming out of the oil sands could get a reprieve, or find a new life, if you like. The mining part of oil sands is more viable than the steam injection part of oil sands. So the steam injection part, it has the same issue as a fracking, that you have to keep spending more and more money to get more oil. But the mining part is more straightforward. It's there. You strip away the overburden, and then you just scoop up the bitumen and then convert it into synthetic crude, and then it's quite marketable. So there's a lot of changes happening right now in that segment.
We'll have more with Hilliard MacBeth right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine, situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration, with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, it's not every day a company CEO publicly says, our stock is overvalued. And that's what Elon Musk did about Tesla the other day. The stock fell. What's the story at Tesla, and what are they up to?
Well, that's the third time he's done that, apparently. I knew that he'd done it before, but somebody tweeted that, went back and checked, and it was, one time was when the shares were $176, and another time they were 300 something, and now they're 700 something. So I'm not quite sure why he does that. It was interesting, though. It came out, and I don't know if probably most people don't know this, but he actually doesn't take much of a salary at all, if anything. But he has a very generous payment scheme, which could potentially run into the billions of dollars. And he's also a very large shareholder of the company. So he has most of his net worth tied up in the shares of Tesla, and some of it in SpaceX. But it's interesting, when he tweeted that about a week ago, I guess, the shares were just on the cusp of reaching a milestone, which would have triggered a huge payment for him personally, the performance bonus that he gets if it's based on the share price and the market cap of the stock. So it was just on the edge of reaching that, and he tweeted that, and the shares went down. But then the next day they bounced back up again. So I don't know. It may be that he didn't want them to go higher so that he wouldn't qualify for that payment, because he doesn't want to qualify for it yet until some more things happen to the company. But things are looking very positive at the company in a very bad market for cars. It's never been like this. This is like basically for decades and decades. There's never been a more difficult environment for automobile manufacturers. The sales are way down, and they were doing that before the recession triggered by the virus. And used car values are plummeting because there's a whole bunch of cars coming off lease that were leased out 2 or 3 years ago, and now the leases are maturing. And so it's going to be difficult for any car manufacturer. And of course, a whole bunch of people are unemployed, so they're not likely to be able to qualify for a new car at this point anyway. So almost all new car sales now are financed, and the finance people are probably getting very nervous. There's a whole bunch of automobile loan paper out there. Most of it's been rolled into securitized. It's been securitized and into securities that represent ownership in a bunch of different loans, and some of those are obviously going to get into trouble. So maybe most of them. So when Canadians, and I'm sure Americans are similar, when they're faced with a financial crisis in their household, they'll stop making their credit card payments and their car loan payments first, and then the last thing they'll give up on are their mortgages. So they want to hang on to their house at all costs. So if that means losing the car to their repossession, then so be it.
Well, in fact, my little sister in Peace River said she knew the oil patch was in trouble when she saw nothing but a continuous parade of vehicles out of Peace River. It was all high-end motorhomes and pickup trucks being towed away. And she was told when she needed a tow truck, it would be a week before it could get there, because they were so busy doing all these repossessions.
Well, now they put, the older cars maybe not, but the newer cars, they all have devices in them where the repossession tow trucks can find them. First of all, they can remotely disable the car, and secondly, they come and they pick it up, put it on a flatbed, and tow it away, and so quite easy for them. But what are the people repossessing them going to do with them? There's no real market to sell them. So there's been stories I've seen on Twitter of pictures of acres and acres and acres of just brand new cars sitting in empty fields by the ocean where they've come from Japan or whatever, and there's just no demand for them. So, we were talking a minute ago about office towers. The other disruption, and Tesla's been partly responsible for this, is the automobile dealer, who is, now it's very difficult. If they need the new car sales to get the warranty. Everybody thinks that if they don't use the dealer's maintenance department, then they might void the warranty. It's probably not technically correct. You'd have to read all the fine print, but the dealers make an awful lot of money off of the maintenance department. But they do need new car sales in order to keep feeding their maintenance department. So everything is, there's a lot of maintenance that probably can be delayed, especially if you're not driving your car very much. Then that oil change doesn't seem so urgent anymore. And so there's just a tremendous number of things happening very quickly here. And there's the whole thing the stock market seems to be saying, because the stock market's rallied from March 23rd now to May the 5th or 6th. That's a 5-week rally. It seems like the stock market's saying that we're going to go back to where we were, but all the other evidence seems to be pointing to more likely we're not going back to where we were, going back to some new place we've never been before.
We'll have more with Hilliard MacBeth right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, with this renewed optimism in the stock markets right now, is this a case again of bonds pay so little right now? Savings accounts pay virtually nothing. Is it still true the stock market looks like the only place you can make any money?
Well, it's there's a lot of conflicting evidence. So one of the things that I noticed last week was the savings rate in the U.S., which had been edging. So the savings rate in Canada is down around 2 or 3%, which means basically this is prior to the start of this. So say by the end of December last year, 2 or 3% basically means nobody's saving any money at all, because things like the deductions from your paycheck go into Canada pension and old age securities. Well, that's, you don't pay into that, but employment insurance and all that, that's considered savings. And then sometimes people belong to a pension plan or something, so that's more money that's taken off your paycheck. And that's way more than 2 or 3% on average throughout the world. So if the savings rate goes down below probably around 5%, that means most people are going deeper into debt on a monthly basis rather than actually generating any savings surplus. What had happened in the U.S. was different. So post 2009, prior to 2009, the savings rate was like in Canada is today. Back in 2006, 2007, the U.S. was down around 2 or 3%. Post the crisis, it jumped up to 6 or 7%, and it really hasn't dipped below 5% since then. And just in the last week or two, it shot up. It started to edge up to 8%, and then the latest report, it jumped to 13%. So one of the things about this so-called savings rate is nobody goes around and adds up all the money in the savings accounts. It would be impossible, right? So what they actually do is they take the total income, they can estimate that fairly accurately, and then they take how much spending has been done in the economy, and the difference is what they call savings. So nobody really knows if it's gone into savings or gone someplace else, but it's money that was not spent. So the other way to say it is savings rate jumped to 13%. The other way to say it would be the consumption rate dropped by, something like 8 or 9%, basically overnight. So this is a huge change, and this is not people putting money into the stock market. This is just people that are afraid. They've either lost their job or they're afraid they're going to lose their job, and any money they have coming in, they're just not spending it. And so what that does is, of course, if everybody does that, it's fine for one family to do it. One family can get out of debt by increasing their savings rate. But if you have everybody doing it at the same time, it's impossible, because what happens is everybody's income drops, because all of a sudden now, without that spending, because of the developed country economies, especially the U.S. and Canada, 70% of the GDP is consumer spending, services and buying stuff and all that. And so if that drops from 70% of GDP down to 60% of GDP, then GDP is going to drop. And the next thing you know, people can't get out of debt, because often a large number of them get caught up in being the ones that are laid off because the spending has dropped. So the harder everybody tries to save money, the less money they can save, because they don't have the income anymore because they've been laid off from work. So this jump to 13% savings rate has never been seen before in such a rapid and extreme amount. And for sure that's going to impact GDP negatively, which means when you look at the stock market, the earnings of the companies that are relying on the GDP, which is almost every company relies on income from the economy, their earnings are going to drop. So the stock market was not cheap in February. In February, before the correction started, it was as expensive as it's been ever, except maybe for the dot-com bubble. It was definitely as expensive as it was in 1929. And that's a stock price ratio to earnings. So GDP plummets, savings rate goes up, earnings go down, GDP goes down, and the price to earnings ratio skyrockets if the price of stock stays as high as they were in February. Now we're not as high as we were in February. We're about right now, as we speak, we're about 15% lower than February, but still very, very high in relation to earnings. And the earnings outlook is pretty dismal if people are going to stop spending, and then all the stuff they would have spent money on, the companies are going to earn less profits. So it's a very, very unusual move in the stock market, and I really don't think that March 23rd was the low. I think this rally is suspect, and we'll probably get another sell-off yet. And I don't know how much cheaper the stocks have to go, but they were getting pretty close to being good value in March 23rd after that drop of 37%. But they still probably have to go at least to that level, or maybe even a little bit lower than that, before you get value coming back into the stock market.
It's interesting how certain things happen either on my birthday or my wedding anniversary, so I never forget it. And that drop in the stock market just happens to be one of those events. I'll never forget March 23rd.
That was an amazing. That's the fastest ever drop of 30. Well, depending on which index you're looking at, it's anywhere between 33 and 37% in just 4 weeks. And there's this whole talk about whether it's a V recovery or a U-shaped recovery, and one of the big Wall Street firms, forget the name, which one, but one of them put out a report saying it's going to be a jagged U-shaped recovery. Well, there's nothing jagged about any part of a U. If you look at a U, it's smooth. So I think what they meant was it's going to be a W-shaped recovery, but they didn't want to say it. And I think that's the most likely. We're going to have several more drops, and we're going to get some buying opportunities in the stock market that are going to be phenomenal. And unfortunately, people are still too wrapped up in the real estate market, perhaps to see what's happening in the stock market. And possibly if they have a lot of debt and a lot of properties, they won't be able to free up any money to buy stocks. But for the few people that are able to tear themselves away from real estate and start looking at the stock market again, the opportunities are coming up. They may not be right away. For instance, the average bear market, when there's a recession involved, and for sure there's a recession underway, there's no doubt about that, is about 14 months. So we're basically maybe 3 or 4 months into it now, if you assume it started in January, February. We got another, say, just roughly another year to go, let's say. So it'll take some time. No rush. But it is time to start thinking about how to get some money together to take advantage of the opportunities that are likely to be very good in the stock market.
Hilliard, thank you so much for chatting with us.
Thank you.
My guest has been Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, macbethgroup.com. If you have any questions for Hilliard or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @Housestreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on Housestreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. Housestreet.com radio is a production of House Street Media Incorporated.